Okay, we are rolling. Welcome everyone to the Pursuant Go Beyond podcast, now also a video podcast. And I am excited today to be joined by Jennifer Bielat, our Executive Vice President of Client Strategy. Jennifer works with our nonprofit clients here at Pursuant, and she has decades of experience working with nonprofits and facing all of the different challenges that the ups and downs of the economy and everything else going in the world can throw at nonprofits, and how they craft the most ideal ways to reach and engage their constituents. So I'm once again just really excited to be joined by her today. And my name is Leah Davenport, and I serve as our Senior Marketing Manager here at Pursuant. And I know that we're going to have a fun discussion today. So Jennifer, welcome.
Thanks, Leah. I'm excited that we have this time that we can chat, look a little bit forward and maybe a little bit back. We've covered a lot of ground in the last 12 months, and we're already 1 month into the new year. So I'm excited to be here.
Yeah, well, thank you so much for giving us your time. So I wanted to take us back in time a little bit. So you, me, and our colleague Matthew Mielkorek hopped on a Zoom call 11 months ago to talk about this new pandemic and how it was going to be potentially impacting the economy, and then therefore also impacting how donors were giving and donor behavior. And so one of the things that we identified in that conversation was that holding on to your most loyal supporters and focusing on retention was going to be something that was going to be really key over the subsequent months. So, putting us back in that mindset 11 months ago, what about our predictions that we made at the time have held true? And what are some things that maybe have upended some of those predictions and went beyond our expectations?
Yeah, so great question. One of the things that we really spent a lot of time focusing on was taking care of the donors that we already had, right? It was really important. We weren't quite sure what was going to happen as the economy continued to sort of churn through the pandemic, whether or not there would be new donors out there to secure. So it was really, really important to make sure that, we're stewarding our donors. And I'd have to say that I'm really pleased to see that I think a lot of organizations actually took that counsel to heart. We saw a resurgence of the use of the phone to make connections with donors. Clearly, there was a digital transformation that took hold, and people were finding creative ways to sort of connect digitally, creating surprise and delight moments. And then, of course, the thing that was wonderful to see was that direct mail, which has been that workhorse for fundraising for so many, many decades. It really, really performed. And I would say, in regard to sort of where's the proof in those statements, Blackbaud just released their third quarter report. And so for our listeners, just a reminder, Blackbaud actually does their quarterly index, and it reports on direct response data. And it's data from some of the very largest organizations that are out there raising money. And so when we look at retention through the lens of their report, we're actually seeing a year-over-year growth. It was about 5%, right? And that was being fueled by multi-year donors as well as first-time donors. However, there's another report out there when you look at sort of how did we do, and that's the Fundraising Effectiveness Project. They released their most recent report. And that looks at organizations of all sizes and all types of fundraising activities. So it would include events, major giving, mid-level, really runs the full gamut. And we see a little bit of a difference. It's a mixed bag, if you will, around retention, where again, we saw increases in those multi-year donors, but first year donor retention, so new donor retention, actually was down. And so for me, that could pose some problems in the year ahead. So, lots of good things that happen, but also some perhaps early indicators of some work that we need to do as a sector.
Mm-hmm. Yeah, and I wanted to dial in at that point because something that a lot of nonprofits experienced was that was a positive thing was we saw a lot of new donors come in, especially for nonprofits who their cause had some kind of direct tie back to the pandemic, whether it was a food bank or a healthcare organization, a hospital, or just involved in even animal shelters. A lot of people were surrendering their animals they couldn't take care of. And so we saw some surprising and really wonderful generosity come through in the last couple of quarters. But now, nonprofits are focusing in on that question: what do we do with them? Are they going to stick around? Are they just crisis givers who you can maybe count on them to come through when times are really tough? How are we addressing some of those questions with our clients?
Yeah, so it's great, that you bring that forward, because that those are the headlines, right? That are also sort of coming out from those reports. Is just the sheer number of new donors that showed up. And so when we look at that, we have to think about them as a group, right? And understanding really who they are is super important. That's the part that I think will be critical in the weeks and months ahead. When you have lots and lots of new donors, it's hard to know where to sort of focus your attention, because new donors can, quite honestly, they can be fickle, and they can support you sort of in that crisis or time of need. We've seen that with disaster recovery types of donors, where they pop in and they support and then they go away. And so it's really important to be able to look at those donors and determine who are the donors that are going to be willing to sort of engage and have that longer term relationship with you. And so that's an area that we're spending a fair bit of time talking to our Pursuant clients about, and trying to help them lean into a culture of curiosity.
Yeah, I love that word, curiosity, because we can make a lot of assumptions about these people that come in, given the context in which they gave, but we won't really know unless we dig into the data and look at maybe what other causes they're supporting, or the channels that they prefer to give through, the frequency that they want to give, all those kind of metrics that fundraisers like to stare at to make some to plan for different scenarios about how to engage them. And something that I want to kind of shift into now is this idea of economic recovery. We've seen kind of the stock market doing some crazy things lately, especially with some of the noise around Reddit and GameStop, and just a lot of just things that have kind of come out of left field lately. But some economists, in terms of the pandemic's specific impact on the economy, have predicted a K-shaped recovery. Would you mind explaining what that means? And does it mean anything or have any impact on currently what we're seeing with nonprofits?
Yeah, sure. I'd be happy to. So when you think about the economists out there and the recovery of the economy, there were a lot of letters that were being shared, U-shaped recovery, a W, a V. But the K was sort of a new letter in the alphabet related to what recovery could look like. And so if you think about the letter K, there's like two spokes, right? A vertical spoke going up and a spoke going down. And so those two lines actually represent sort of two different ways of looking at sort of the economic recovery, two different segments. And so you can look at it from the financial market perspective, right? So, the small investor, right, maybe not recovering quite as quickly as sort of a large institutional investor. You can look at it from wages, right? You can look at it from industries. So like, for example, let's take wages as an example. So a worker maybe in a higher waged job probably had higher likelihood to work remotely and therefore keep their job. If you look at somebody who might be in a profession with a lower wage, so like a waiter, for example, not as easy to take your talents and move those remotely, right? And so for many people in that particular profession, they either lost their job or their hours were greatly reduced. And so when you think about, recovery, it's much easier for the person who is able to work remotely, keep their job. The path to recovery is probably easier there than for somebody in a lower wage. You can look at the same thing from an industry perspective. When you think about tech industries, logistics like Amazon, much easier for them as compared to, say, food industry or the airline industry, right? So that's probably the simplest way that I could explain sort of what a K-shaped recovery looks like. To answer your second question about, what does that mean for nonprofits? I think you can use the same K-shape, but think about it a little bit differently. So when I think about nonprofit organizations, nonprofits who actually had diversified fundraising portfolios, where they were using lots of channels and lots of different ways to raise funds, are probably having an easier time than organizations that were heavily vested in in-person, peer-to-peer type events, or even major giving, right? As we saw some major donors, trench in a little bit and weren't giving in the exact same way. I think also too, organizations that already had a fairly stable, loyal base of supporters probably are faring better as well as compared to organizations who maybe had a revolving door of new donors. And then likewise too, I think it's really important to reference access to data. So organizations that were able to look at the data that they had or bring outside data to bear, were able to make really good, quicker business decisions, right? To actually sort of take funds and move them across and put them towards strategies that were actually taking hold. So, as I think about the recovery for nonprofit organizations, I think we will see a little bit of the K.
Mm-hmm. Yeah. And what I find interesting about that is there are some external factors that impact how a nonprofit is going to be impacted by, just based on maybe the industry that they're in or the causes that they serve. But what I hear you saying that is interesting to me is a lot of what has to do with how a nonprofit recovers has to do with how just nimble and flexible they are as an organization. So are they invested in multiple channels? Are they looking at the data? Are they able to make quick data-driven decisions versus, we haven't been using this now, so we are just gonna sit on our hands and stick our heads in the sand and wait it out. And I mean, we saw that happen. We saw organizations that pulled back their fundraising efforts, that hit pause. They took a big hit compared to nonprofits that said, no, we're going to make some adjustments. Like maybe if we had a gala event planned, we're going to go virtual. If they had a campaign planned, they went forward with it anyway, maybe with some adjusted language. And so, is that overall the kind of lesson that we're bringing forward is you can't be a late adopter. You have to be on the forefront of your fundraising strategy today to weather the next storm.
Yeah, I think so. I think for me, we saw a lot of boldness coming from leaders, right? And I guess, as I think back to when we chatted with folks in March, one of the things that I think I shared was, just lead strongly, lead boldly, don't be afraid to try new things. And we saw a lot of innovation, right? And along the way too, there were things that probably didn't work well for others, but it's okay to fail, right? And the old adage is you fail fast, right? So that you can learn something and then retool and come back out with something successful. And I think we saw a lot of that with leaders. And I think we'll continue to see that, as the recovery plays out, right? And the pandemic continues to evolve, as the months go by.
I'd love to kind of look next at what we call the giving pyramid. So what have we seen happening with our annual fund donors, with our mid-level donors, and then our major donors? What are some shifts and changing that we're seeing kind of across the pyramid, especially as we just came off year end with our clients? And how is that kind of informing some of the strategies that we're looking at in Q2?
Yeah, great question. So at the base of the pyramid, we already touched on this. There is an influx of new donors, right? But how we take care of them is going to be critically important. It's also important to recognize that a lot of the giving that has been happening through the pandemic has been fueled by lower level, general level type of donors, gifts that are $250 or less. And so amongst those donors, there is likely to be some donors that are ready for a different relationship with you. And that goes back to that culture of curiosity that I was talking about, and really understanding who these people are as, as not just as donors, but sort of who they are as humans. And so we've seen a lot of activity, not just with our clients and how they're investing, but also across the industry in mid-level. And so when you think about, mid-level, that, the base is sort of that fuel in the tank for mid-level and ultimately major. And so, as I think about some of our clients who've invested, not just dollars, but actual staffing resources against mid-level, they're experiencing some really wonderful results that I think, really organizations across the board should be focusing in that middle of the pyramid right now. Major giving, we did see, a little bit more of a reemergence back, in the third quarter of both mid and major, but major in particular are starting to kind of come back. But as we all know, as the recovery continues, there's going to be a lot of competition for major gifts. And so it goes back a little bit to making sure that we're taking care of our donors that are most important to us, our loyal base of supporters. Another area that I'll mention that we've seen organizations really focusing on, Julie, and this probably is a little bit more geared towards the base, but it would be sustained giving. So sustained giving, as we know, super important, and it allows us to sort of capitalize a little bit more on that frequency of giving in order to drive overall performance. And then the final area that I'm seeing a lot more focus on is planned giving. And that's always been such an important part of a comprehensive portfolio, development portfolio. And so as you think about sort of major giving, a planned gift is just as important. And so a lot of organizations are really looking at how they can drive more bequest intentions. And so it's interesting when I think about mid-level, sustained giving, and then planned giving, those are all recession-proof strategies that really organizations that have that turned on can weather, bumps in, the economy or uncertain times. And so I think it's really wonderful to see some of that, focused in those particular areas coming to play. Mm-hmm.
Yeah, and one word that we haven't used yet that plays into all of those strategies is donor loyalty, which is something that we really, it's kind of our motto, I think, at this point here at Pursuant. It might as well be on the underneath the logo, I think. And so what are, we've touched on them already, but kind of as our final wrap-up question, what are some ways that nonprofits can think about donor loyalty and apply them in some of these different scenarios, especially as we move forward this year?
So the one thing that I want to make sure that our viewers, our listeners actually understand is that donor loyalty is more than retention. So yes, retention is part of donor loyalty, but what we really are talking about is, again, it's that getting to know who your donors are, right? And it's getting to know them as a human. So we have a lot of data at our fingertips as it relates to sort of traditional behaviors around giving. So the recency, the frequency, the monetary value. But what we're talking about here is actually looking at ways to understand what motivates them to take action. And so when we think about donor loyalty, it actually lives at this really cool intersection of an organization's unique value proposition, how the donor is already behaving with you, but then also what motivates them to give. And so, you know, as I think about the donors, just generally, they're expecting much more today than they did, you know, decades ago, or even 3 or 4 years ago, from the brands that they interact with, right? They're expecting their brands, including the causes that they support, to actually know who they are, right? Mm-hmm. And, you know, it's important, you know, when you know who they are, you can actually create an experience for them, you know, right kinds of messages, right timing, the right channel. And that allows you to actually create just a better journey for them that's going to ultimately end up with you know, a greater commitment from them, and also greater support through giving. And so it's not, you know, it's sort of one of those things that we talk about, but it's not that hard to do, right? And, you know, taking that first step towards sort of driving greater loyalty, it doesn't have to be hard. You know, there's tools and there's resources out there right now that can really help you get started. And all it really does take is, I think, that commitment to curiosity and wanting to know who your donors are. And so, you know, there's, you know, in the reference to sort of the tools and resources, you know, augmented intelligence we hear about that all the time now as marketers, and you know, in particular, Pursuant has invested in this area to be able to bring third-party data in along with what you already know about your donors to really paint that full picture of who they are as a human. And that's where I think the difference maker is going to be in driving donor loyalty.
Mm-hmm. And also augmented intelligence, as we discuss it here at Pursuant, is kind of that perfect marriage of your existing data, that third-party data that builds up that richer profile of who a person is, along with the decades of strategic insight that we can provide in different scenarios to guide a fundraiser down a certain path of decision-making. Do I have that right?
Yes, you do. You do.
Okay.
It's an exciting time to be a fundraiser, to be a marketer, because there is so much more insights that you can glean if you leverage data and just your own intuition around what your donors are wanting.
Mm-hmm. Yeah, and I think we didn't explicitly touch on this, but I mean, we can probably think offhand of big for-profit brands that do this so well, like Netflix, Amazon. They're collecting behavioral information about us as we go about our interaction with their products, and then they're putting forward additional recommendations into things that might improve the experience, whether it's in the follow-up email from Amazon that says, you know, we noticed you just bought this book. Here are 3 other books that are by the same author or on the same topic that you might be interested in. And their whole goal in that is to guide you to that next purchase. But what if, you know, the nonprofit that you're supporting, let's say you donate to a particular fund or a particular cause within that nonprofit, you know, what if in that thank you email that they said, hey, thank you so much for your gift. We appreciate you. We're glad you're here. Here are some additional ways that you can engage with us. And it might not be immediately about making that second gift, but it might just be informing them of all the different kinds of ways that they can go deeper with the organization and build that next step in the experience. And so, yeah, it's just exciting to see nonprofits kind of wake up to that new reality we're living in, and see how they can improve that experience for the donor who really wants to learn how they can really make a bigger impact in the world, because that's what we're helping our donors do, is to make them feel like they are an integral part of making the world a better place.
Yeah, you couldn't have said it better. There's nothing like the joy of giving.
Yep, exactly. Well, Jennifer, thank you so much for your time today. I've really enjoyed our discussion and getting the chance to sit down and learn from your wisdom. And so thanks again for giving us a bit of that today.
Well, thanks for inviting me.
Oh.